with mortgage rates as high as they are and real estate prices holding steady, buying a home is more challenging today than ever before. So what we're going to do today is bring on our good friend, Brent Starts, and he's going to talk about some mortgage options that are available for first-time buyers, also buyers that have cash, but not enough cash to actually close on a property, and buyers who don't fit into a program for no money down, but might fit into a program for 1% down. So stay with us, and we're going to be right back with Brent Starts. So Brent, we're back together again, and today we're talking about mortgage rates and how first-time buyers with cash but not enough cash to purchase. We're running into that right now because prices have gotten so high, and also, you know, the Hometown Heroes program. We're going to talk about that today in Florida, but it's running out of money. So there's some more options that can help first-time buyers get in the market, and we're going to talk about that today with them also. So let's get started. Where do you want to start at, man?
Well, I'll tell you what, the Hometown Heroes program, because that's kind of urgent right now, Lee. It started on July 1st, 2023. It was just enacted. The program was expanded to all Florida employers. In other words, if your employer has a brick and mortar location in Florida, you qualify. It used to be just for first responders and teachers and some medical professions. So now it's been greatly expanded, and the increase to $100 million as as far as that's funded in the program is down to about $35 million as of this morning. So it's a big hit. However, and this is the caveat to the whole program, it is going to run out of funds. And the word is that the legislation isn't set to vote to expand on the program until next July. So we're talking about another month possibly where we can use this program and before the funds expire.
And when the funds expire on this, that's not going to be refunded till next year, right?
Right. That's the
word
plan
on the
right
street.
now.
But that could change. That could change.
It could change.
Now, if someone goes to this Hometown Heroes program site right now, it doesn't talk about the ability for anyone who hasn't owned a home for at least 3 years to purchase a home if they work for a company here in Florida. It's still just first responders, nurses, teachers. Right.
Yeah,
but it's available to everyone
news
right now for a first-time buyer, correct?
That's right. That's right. And so, a lot of people are surprised because they've heard of the Hometown Heroes. Even realtors are surprised that it can be used for other clients. And so it's a great way to help those people that really just can't clear that down payment hurdle. It's basically, this is what the program is. It's up to 5% and up to $35,000 for closing costs and or down payment. So it's not just closing costs. It's not just the down payment. It's to be used towards either or. So you can actually buy the rate down. There's some creative things, or not buy the rate down, but you can actually use it towards the closing costs rather. So
and that 30, right, and that up to 35,000, it says here it's 0% non-amortized 30-year deferred second mortgage.
That's right. So 0%.
Now, what people need to be aware of is that when they refi the house or sell it, they're going to have to refi that amount into the home, that 5% of the cost of the home. They'll have to refi that back in, or they'll have to pay it at the closing table when they sell their home, correct?
That's correct. Both of those trigger a payoff. Again, it's at 0% and there's no payment. So it's if you borrow $20,000, it's 10 years from now, it's a $20,000 payoff when you refinance or sell the property. Yeah.
Right. And it's just a beautiful program. It really is.
Oh,
it's just unbelievable. It's helped so many people. I mean, there was 150 million in it at the beginning of this year, and now it's down to what? We're about 40 million now.
Yeah, 35, 40 million as of this morning. Right. And
Okay.
so, and we claim it. It's really important to understand this too, Lee. We have to reserve those funds. So, and when we reserve the funds, in other words, you find a home, we lock the loan. We only can lock it for 30 days. And so it's a little bit different that way. So we have 30 days to close the loan, close the transaction, or you're out. And so you have to restart the whole process. And so I can't emphasize enough the urgency. If you're looking and that was what's holding you back is the down payment and closing costs, now is when you want to act on that.
Right. And so if you're looking at new construction, that's not going to work out unless it's ready to go within a 45-day, 60-day maximum amount period, correct?
That's absolutely correct. Yes.
So someone's going to need to look at a resale more than likely on this program if they're going to be able to use it over the next couple of months here.
That's correct. And the interest rate is set by the bond program,
Okay.
Florida Housing Corporation. So,
And what is
yeah,
that rate? It's basically a conventional rate, right?
it's a conventional rate. Right now it's sitting at 7.125. I just pulled it up this morning. That's where we're at this
Okay.
morning. It changes. Boy, every 4 or 5 days we'll see a movement because the interest rate market has been kind of volatile this last several weeks with the inflation reports coming out. This morning, PPI came out, and so so the bond went down. Rates went up slightly this morning. Not for this program; they haven't adjusted to it yet this morning. But with the price of oil, we're seeing the cost of raw materials going up, and that's going to cause future inflation. So that's a concern we have right now, that rates could go up temporarily before they continue to go back down.
Well, we're definitely seeing rebound inflation, and it's definitely
Yeah.
connected to oil and gas, because
Right,
oil and gas
100%.
prices are going up right now, and that's going to raise everything else. Food prices are going to go back up. Everything's going to go back up.
Oil is used to produce pretty much everything and or transport it, to distribute it. So it's connected to almost all manufacturing and the creation of any product and service. And so it does impact.
And you need
it.
natural gas to produce fertilizer.
Right, exactly. And so, and what triggered the oil situation was Saudi Arabia. They reduced their production by 1 million barrels per day, and so that lower supply pressures, the cost up. That's what's causing it.
After we reduced our supply too. So
exactly. So, making something more scarce makes it more valuable and pricey. So that's
all right,
what we're seeing.
Let's get back to this program, and then we'll go on to the next one. Because the rates are rates now. I mean, it is what it is. Unfortunately, they're going to be this way, going sideways for a while, until we see some kind of change in policy, or we go into a recession. And definitely there are signs of recession coming again. This thought that we might be heading for a soft landing. I'm listening to a lot of economists right now, and guys in the market, experts in the market, saying that they think they're back to the feeling that we're going to have a hard landing because of rebound inflation. So it is what it is. We've talked about it before. You can check out our latest video that we did a couple of weeks ago, but this isn't, I don't see this rate changing for a while. So if you're interested in purchasing a house right now, I think the unfortunate thing with that is you're going to have to buy a little less house, and then your rate's going to be higher until you can refi. So, and just going back to, I'm seeing that sellers are super aware of this now, and especially with resales in markets where you're seeing a lot of new construction in that community. So they're very aware of that. So they're not sticking to hard pricing, and a lot of them are offering incentives with the closing costs. So depending on the community and the buyer, there's a lot to be had. And then on the resale side, on the new construction side, they're trying to keep prices down right now on new construction to stay in the market. So, I mean, communities like Cadence have sold very, very well because of the price point they've kept in those houses. And then now they have those new townhomes that we're meeting with a client today, another one on them. And those are running around 350, which is a super bargain, because as soon as rates come down, those townhomes, the equity in them is going to just go up like crazy, because there are resales in Port St. Lucie that are more than those townhomes, and those townhomes are very, very nice. So those are good buys.
Nice. Yeah.
Right. And so right here let's jump into this. There are loan limits that you have to remain in. You can go to this site, Hometown Heroes program in Florida Housing Finance Corporation. And it goes into all the Hometown Heroes program. It goes into the loan limits. You can use the Home Buyer Loan Wizard, but there are select brokers that can do this and mortgage companies that can do this, and you're one of them, Brent.
Right.
And
Yes.
that's something that's really great about this program, is that you're
Mhm.
able to offer it and offer it in a better way than some of the other um, lenders can.
Yeah. We're actually, we locked one this morning, and the debt ratio has to be 50% or lower. So we're at 49.95. So we had to get really creative on that one just a few minutes ago, right before we got on the air. So, that debt ratio limit, so we'll look and really dial in, your individual situation and see, what we need to do to get you into it and get into it quickly, if that's your desire, if that's what you need
Right.
to do.
And if you're interested
Mhm.
in this program, you want to reach out to Brent right away. So his information is on the screen right there. So is mine. Reach out to one of us and let's get
Mhm.
talking about this ASAP, because it's going to run out. Let's go on to what else that we can offer here, Brent. What other programs are out there? We had been talking about a lot of cash buyers coming in. We're running into this right now where they're needing to pick up a mortgage, but they have over half down. Maybe they're
Hmm.
buying a $500,000-$600,000 home, but they only have $400,000. Talk on that a little bit. How can those folks, especially coming into Florida retiring, we're seeing a lot of that from other states. How can those folks benefit from some programs that you have right now?
Absolutely. We have a program that's really working well for those that are retiring. And, I think what, Lee, probably 70% of the things we work on together are folks coming from out of state or coming up from Broward or Miami-Dade, looking for an
Right.
affordable home in a nice area. And so what we're seeing is, they come in here and they want to buy a home, and they sell their home for $400,000 or $500,000 in equity. They're moving to Florida. Well, how can we get them qualified? And they're looking at a $600,000 home that's their dream home, but they don't want to be house poor. In other words, buy a home and all their money's in the house, and then nothing to live on. And so for folks that are over 62 or over, there's a program where we can actually have them make have a purchase and put down maybe $300,000 versus $500,000, and then they get the home they actually want and still not have a mortgage payment. So the benefit why people pay cash for a home is they don't want a mortgage payment. So that is still possible with a substantially large payment down for folks that are over 62. It's a creative strategy. It comes with a line of credit that kicks in about a year after the closing. And that goes up, and it can never be taken away. Like, I don't know, Lee, if you remember during the 2008, 2009, financial crisis, if you wanted to get a pull on your second mortgage or an equity line of credit, those were shut down. The banks could just randomly shut them down. With this
Right.
program, it just stays, and it grows with the value of your home appreciating at the rate of basically the CPI. So it's a great long-term strategy for folks that want to come here, not spend all of their equity on the new home, and still not have a payment. Very creative.
Great. And now, what else do we have for first-time buyers here?
Yeah, the Hometown Heroes is a great program. The Home Ready, Home Possible with Fannie and Freddie, Fannie Mae and Freddie Mac. They have their own, 3% down programs that they're great. I mean, and preferred MI, in other words, mortgage insurance is lower, and that's a first-time home buyer program. But something we're really excited about, something we have, it's kind of an exclusive. It's a 1% down payment that's coming on board. However, it is dependent upon the area median income. It's called AMI, area median income. And if you make 80% or less of the area median income, you could qualify for that. It's an income-based program, but it's another great way to minimize that down payment. So we're looking at areas that, just outside, a little further west, typically on these types of transactions where it really works well. Some of the, like a Cadence, that would probably work as well if they don't have other debt. So as far as making the debt ratio, but that's another exclusive we're going to have. And I don't want to announce it right now, but hopefully in 3 to 4 weeks, we're going to have a very, very exciting program coming out to help with down payment assistance that will not be related to income. So to qualify. So I'm excited about that. We'll keep a lid on it until about 3 or 4 weeks until we can verify it for sure. And all the nuts and bolts are put together and we can announce it. But some exciting programs that will essentially
And
replace.
on that program, people can go ahead and reach out to you right now and get pre-qualified, and you can take a look at their situation, especially first-time buyers, because they really don't know the process. They've never been through it.
Right.
And right now is a great time for them to get in the market if they can afford it. If you can't afford it, stay in your rental But if you can't
Mhm.
afford it and you can find something that fits into your budget, it's really a great time to buy, because there's not this frenzy going on. And, it's my opinion and your opinion and many of the opinions of many people in the market, that especially here in Florida, but it's other places too. I mean,
Yeah.
markets are selling. I mean, we have a client up in, we've mentioned before, Lafayette, Indiana, and they put their house on the market and sold in a day. So,
Right.
you're
Right.
working on that deal. So
Right.
yeah, so it's a really great it's a really great time to get in the market, but unfortunately, it's really hard to get in the market for a lot of people. So that time is
Mhm.
coming. So if you can't do it right now, it is what it is. But if you can,
Mhm.
it's a good time to do it, because you're not going to be in that price war with a whole bunch of other buyers, which I just believe there's a lot of people sitting on the sidelines, waiting
Oh.
for rates to come down, because a point is a lot more than $20,000 on the
Mhm.
mortgage. So, and
Yeah, you're going
that.
to see when rates, yeah, absolutely. And rates are going to come down. Like you say, Lee, you bring up a very good point. We see it on the front lines. So many people on the sidelines waiting for rates to come down. So when they do come down, and they will, then you're back into the feeding frenzy, and 20 offers within 2 days, and hoping
Well,
you get
you
one.
have 95% of all buyers under 6%, and we're at 7%.
Right.
So there's no way a lot of these people are walking out of their homes unless they're renting their homes. And that's a good, let's bring that up real quick, because we've had a lot of
Yeah.
people do that, where they've rented their home and use that mortgage payment, that rent from their home, because their mortgage is so low, to go against their new home that they're
Mhm.
purchasing in Port St. Lucie. A lot of people down south have done this, and it's really worked out well for them. So that's
Yeah.
another great idea for people, and we've seen that work great for folks right now. Just rent their house, and collect the rent and use that rent to offset the mortgage.
Absolutely. And it's a wealth strategy, frankly. I mean, when you buy,
Right.
you have a $500,000 home, you could sell it, take your equity and put it into another one, or you could buy another $500,000 home where it's, now you have $1 million in home ownership that's appreciating. If
Right.
just run a small, like a conservative 4% appreciation a year, you're looking at $40,000 a year you're making in your sleep versus, on the 500,000, and 20,000 per year, using an average of 4% appreciation. So, and that's a conservative figure. So I think it's a great strategy. We're encouraging people. That a lot of people aren't
One of the best
comfortable
ways to
managing.
build wealth is through owning a home.
Unbelievable. I think you and I talk about this,
Well, let's
but
just look at Port St. Lucie. 8 years
yeah,
ago, you could buy a house easily for 175,000, 250,000. Really super
right,
nice house. That same house now is going to cost you, 450,000 to whatever. I mean, some homes
mhm,
in Port St. Lucie are selling for 6, 7, 800,000. So,
yeah,
and there's homes in the millions. They're just not selling. And they're not selling here either in Palm Beach County.
mhm,
So, Palm Beach County's struggling with those $1 million sales also. So, it's a
mhm,
weird market we're in right now, but it's going to flush out. But right now, again, great time for people to get into the market, find a home. Most of the home, really pretty much no one has in new construction has any wait lists. A lot of them have spec homes available, so you can pick those up for a little bit less than you would to build a home out, because they're trying to get rid of those. And then a lot of the communities like, Cadence and Heron Preserve, they're just keep building. They're building.
mhm,
And
yeah,
so their specs are starting to catch up a little bit, but they're still selling a lot of houses. I mean,
yeah,
so it's a moving market. Kinley opens today officially, which is in Port
yeah,
St. Lucie. There's here in Palm Beach County, homes are starting in the millions, but there's lots of specs, and these new communities are trying to get rid of them. So they're offering a lot of incentives and a lot of upgrades attached to that. So there's some buys right now, and pretty much everybody's willing to negotiate. If you look at these homes, especially
mhm,
the higher the price point goes, people are willing to negotiate. So, and I'm
mhm,
finding too, uh, we were looking at rental properties to purchase a couple of weeks ago. And a lot of these homes in the rental properties, they're putting new roofs on them. So you're walking into a house that's clean, it's furnished, it's got a new roof on it, and you can just kind of pick it up and move someone in, maybe do a couple little things here and there. But, um, you know, that was in the 350 market, right around 350. So I'm going to make a video on that, but there's some real deals out there right now if you're looking to invest in Port St. Lucie. And the great thing about Port St. Lucie over Palm Beach County is it's been moving at 10% a year for the last 9-10 years. So it's going to continue to go up on the average 10% a year. I mean, it went up over the COVID almost 40%. So, I mean, it's just crazy numbers that Port St. Lucie has gone up, and it's made the top 100 list. But you know, it's a market like Orlando. A lot of people moving there because there's homes in those markets that are still affordable. Anything else you want to add before we jump off?
Well, the supply and demand. There's still too many people coming here and not enough rooftops, you know, and
well,
so
that's everywhere. You know what I mean? It's really in most cities that you see where market's moving. There's just not enough roofs, and some of these markets don't have new construction, so you don't. You're not competing with that. You are competing with it if you're trying to sell your home in a market like Port St. Lucie or Orlando, where there's a lot of new construction, but in a lot of markets there's no new construction, so those homes are selling very quickly.
Right. It's an interesting market. And I think, you know, there is an opportunity here, you know, if you're comfortable and you can make the payment for 2 years and look for that opportunity to refi down, I think that's a great play right now.
Right. All right. So let's jump off, and hopefully everyone got a good sense of what's happening with the mortgage industry, and reach out to Brent for any questions or concerns that you might have, or just to get started. Starting the process. It's never too early to start the process. And Brent's always great to, always really excited to help people. So
absolutely.
Thanks a lot, Brent. And
thank you, Lee.
So if you are a buyer or a seller, don't forget that Brent and I are full-time realtor and a full-time mortgage broker. So we are here to help you. Information is on the screen right there. Also, if you have not subscribe to this channel, go ahead and slap that subscribe button right there. Ring that notification bell so you don't miss any of our real estate tips and tours. You can watch more on the market right there. Be kind to each other, and we'll see you next time.